Airbnb in the spotlight tomorrow afternoon. The vacation rental platform set to report its fourth quarter earnings tomorrow after the bell. And investors are bullish leading up to a checkout. Shares up nearly 7% on the day. Another travel stock, TripAdvisor, also preparing to release earnings tomorrow afternoon. Jed Kelly, Oppenheimer's managing director of equity research, covers them both. Good to see you, sir. Let's start with Airbnb. Why the pop and what are your expectations?
Yeah, I think the pop today is related to some strong third-party data we're seeing from Airbnb. They do a decent job tracking Airbnb activity, and I think they released their January data over the weekend, and it looks pretty strong. So I think investors that subscribe to that data, it's pointing to January nights actually accelerating. So it looks like there could actually potentially be upside to the street's earnings. I mean, Airbnb is a very highly shorted stock too, so there's probably short covering going into the print. So I think those are the two leading factors for why the stock's up today.
Jed, you also covered TripAdvisor, have a market performer rating on that stock. It's also had a strong start to the year, up about 35%. What would make you more optimistic, more bullish on this name heading into not only the report tomorrow, but the second half of the year?
Yeah, with TripAdvisor, it's all around the strategy. Their tours and activities business, Viator, continues to be on a pretty solid growth trajectory. The key is, what's the new CEO, Matt Goldberg, going to do around TripAdvisor core, and how do you make that asset more monetizable, right? They have a lot of Google competition. I know everyone's talking about some of the new search features seeing around AI and how that impacts travel. If Google and Bing are able to do, enhance their search around travel with AI, then that's a headwind for TripAdvisor. So I think with TripAdvisor, a lot of it's around what's the strategy. I mean, we've been covering this stock now, I think, for almost 7 years. We've never been able to recommend it, and it's all about the Google risk. So the more you use Google Maps, the more negative it is for TripAdvisor.
Boy, interesting point on the AI. Touches just about every industry we cover here. Earlier today, Expedia CEO Peter Kern joined us and had this to say about travel demand so far in 23. Listen.
So far through the beginning of the year, it's been pretty strong throughout. It's not just a January thing. And, it's global. We've seen it in many places. We've seen it driven by lots of categories. International continues to grow. And remember, we're seeing a time where last year, this time, we a lot of things weren't open yet. So things like cherry blossoms, international events, things like that are still growing, and people are getting back to that in a pretty robust way.
Gotta love the cherry blossoms. The initial read on this, Jed, was it was revenge travel. But is your data telling you this is just kind of a new norm, the commitment to travel?
Yeah, I don't know if it's necessarily a new norm. I think we've been seeing it, right? Even before COVID, experiences were growing faster than things, especially with the younger generation, Gen Z, millennials. They value experiences over things. So I think there's part of that. I think the other thing that COVID kind of has let people do is it's given people more flexibility to not have to travel on a Friday and come back on a Sunday, right? You can now leave on a Wednesday or Thursday, 2 cheaper days to fly, and come back maybe on a Monday or Tuesday. So I think that flexibility's a pop to demand. And, I wouldn't call it a revenge travel. I mean, the data is pretty strong in the U.S. and the U.S. has been pretty open for travel now for at least the last 18 months. And, we're coming up on spring break travel here in the Northeast. Rates are still high. You're trying to fly. It's still really high. So I think I think it's just people wanting to travel. And I think it's this thing that experiences are valued over, products or things.
Jed, so you cover travel. You also cover DraftKings. It's certainly coming off a huge weekend, you would think, for the company. They had their Super Bowl ad. Certainly, you would think they saw a huge uptick in terms of traffic on their site. How big of a boost do you see Super Bowl being to DraftKings, and what are you expecting to hear from the company later this week?
Yeah, I think Super Bowl, it's in their guidance. I think, you look at the geo-complied data, I think traffic to sites was up over 30%, so that's strong. We're hearing that I think the Super Bowl was a net positive for the books. The Chiefs winning was a good outcome. The game did go over, but I think they all had pretty good outcomes in their prop bets, even though you did have stars with big games. So I don't know. I think the Super Bowl's in the guidance. I think the outlook's all about, are they able to going to be able to prove to the street that they can actually generate and grow this business profitably, right? So they've got a pretty good outlook for state launches this year. So that should allow them to leverage their advertising spend better. And I think if you can start to show that they're leveraging their advertising spend, you also have the land-based guys being more rational, which is a positive. So I think you see more rationalization in the model or in the industry, and then you actually start to see advertising leverage, and that it could be down year over year. I think that's a positive for the stock.
All right, we will see what we get later this week. DraftKings up about 3 or 8% over the last 3 months. Jed Kelly, thanks so much.